The Federal Reserve has kept a balance sheet of around $4.5 trillion that has kept the markets afloat. The entire run-up after QE3 ended has all been based on the assumption that if the market falls, the Fed will be there to buy more garbage and toss it on its balance sheet. Then other central banks joined in on the party and bought US shares. But things are apparently going to change. You came here for the truth, so let me unveil that for you. Let's look at the Federal Reserve's balance sheet. If you look at this chart, it would seem as though the Federal Reserve has been reducing its balance sheet. In fact, it was Janet Yellen who said that as of October 2017, the Fed will reduce that balance sheet. Wait a minute, let me check my calendar. Oh yes, that's right. It's December 2017, and there has been no meaningful contraction in the balance sheet. Take the same chart and zoom out, and you see there is no progress. Look at where it has gone. Look at where it was back in 2008. Look at where it is today. It's going to take a hell of a lot to get back to the 2008 levels. QE1, QE2, QE3. And you can see that it's been years and they have been unable to taper. They've been unable to let go. $4.5 trillion worth. The BOJ, the ECB, they're all holding around this same amount. And it shows us how unstable the markets are. And it will take a considerable amount of time to reduce the balance sheet based on the numbers provided by Janet Yellen. And that is right here. It's going to take until the year 2033 to reduce the balance sheet back to where it was prior to the financial crisis. And that assumes that the stock market doesn't come down. That assumes that there are no crises around the world that would affect the US at all. The year 2033. Now, I had a good laugh when I first saw this. But now that I think about it, it's actually pretty sad that there are people out there that believe this. I kind of feel a sense of pity. Duration of the US business cycle. You can see that, according to the Treasury, they are forecasting, believe it or not, another 10 years of continuous growth without a recession. That would lead to the longest period without an economic contraction in history. Wow. It would blow right by it. Almost double, in fact. We're already one of the, at this point, one of the biggest booms that the world has ever seen. The equities market has been doing so well, consistently pulling everything with it, some things with it. Does anybody believe this? Well, I've seen many people, in fact, that believe what Janet Yellen said, and that is there will never be another financial crisis in our lifetimes. This is the document here. If you're interested, you can check it out for yourself, right from the Treasury's own website, where they make this ridiculous claim. They're going to be able to sustain growth for 10 additional years. US equities as a percentage of GDP, higher than the dot-com boom and bust, higher than the housing crisis, financial crisis. And here we are today, escalating far beyond that. US equities have a major play in everything that goes on. Look, total US securities, debt and equities as a percentage of GDP. Same situation, higher than both previous times. The amount of money that's been flowing into US equities, where has it come from? From our grandparents? From our teachers? From the guys living on the street? No, it's from central banks. Central banks are printing money out of thin air. They're buying this stuff up. It's pushing the markets up. I don't understand why people in the financial industry especially are not acknowledging this. It's so ridiculous. You have $15 trillion printed over the last few years by central banks trying to support the economy, trying to support the markets, I should say. And there has been not a peep from those in the financial markets. You know, they actually talk about it, if you ever hear about it, as if, you know, it's beneficial. It's not a problem because they'll get rid of that later. But they never do. And if they do reduce it a bit, it's going to have to stop at some point. But so far it's been years, literally years, that they've been talking about reducing their balance sheet. Here we are today, approaching the year 2018, still nothing. Rest of the world holdings of US financial assets, a massive increase since the dot-com boom and bust here. It's the foreign reserves, US equities. I've covered it here before. I'll move on. Oh, and that's it. If you found the video informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. Take a look. Links are in the description below. Take care.